Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Thursday, the 1st of December, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, oil is in the on the front burner today. This is the first day of December, the last month of the year. We've had a pretty good rally, so Santa Claus came early, I think. But some of the key elements here, including OPEC's discussions that will also continue with non-OPEC countries, the expectation is that they would get non-OPEC producers to agree not to make up for the freeze in production that they set yesterday. Oil prices are still responding to that. We'll talk about that in a second. November's over, and the biggest hit in November was against the bond markets. Just had a terrible month. $1.7 trillion of value was moved out of the bond markets. This is the worst month for that market since 1990, according to Bloomberg. And it's still selling lower this morning with the 10-year yield up another 3 basis points at 2.41%. It's the highest since July 2015. This is saying something to us. The Treasury markets tend to be the place where the early movers tend to go. Oil, of course, this morning is continuing higher. It's trading at the top of the heap on my futures monitoring quote page. Oil January WTI is trading at 50.75, up 2.63%, $1.30, followed by the Russell, the Euro, and then the U.S. indices, which closed at their lows yesterday with NASDAQ leading the bunch down. The worst mover today, or the worst performer today, is the DAX, followed by the U.S. Treasury bond. The other thing that there was a slew of numbers that came out overnight, including UK housing prices and all that. I'm not going to cover that. You guys can take a look. Initial claims came out a half hour ago, 268,000 versus 253. That's slightly worse. Continuing claims 2.08 versus 2.03, also slightly worse. And then the other thing that's out there is that I'm sure you've all heard that a member of Goldman Sachs has been nominated to the cabinet, to Trump's cabinet, and Goldman Sachs is trading at its highest level since 2007. That's not a coincidence, I'm sure. It closed yesterday at $219.29. Goldman Sachs is up 36% since August 31st. Anyway, so those are the big items that I have. Let's switch gears real quickly here and take a look at what was expected yesterday. Yesterday we were gapping up slightly, and the primary expectation was for a test into the prior day's range of value high and a continuation higher. The overnight high was 2213.75, which was an all-time high again, and the expectation was that would be retested during the session, but in a choppy environment, in a choppy type of way. In other words, the expectation wasn't for an open drive up. The secondary hypothesis was to push higher early, and then have a large rotation down, and then balance at the high and just stick around there, and basically finish the day at the high at the all-time high set 2 days ago. The tertiary hypothesis was for a chop on the open and then a drop down into the prior day's point of control at 2203.50, and then resting there. What it ended up doing is actually hypo 3, but if pushed further down than expected, What we ended up having is it actually, I did not expect this, although I really should have. It actually moved down into the point of control. You could see that it's testing right there on the first shot. The point of control at 2203.50. It stops two ticks higher, attempts to get out of the prior day's range. So we have a drop, attempts to get out of the prior day's range, and then it moves down to the point of control again. This looks like it's stabilizing. This looks like hypo 3 on the nose, and the expectation is for a weak attempt at the low, and then a push higher and then sideways. That's what I was betting on. It pushed back to the mid up here, mid and VWAP, and then it started to rotate down even further. And it just seemed like yesterday, it just seemed like end of month selling or rebalancing or reassessment of risk, which happens often at the end of the month. There was a lot of selling on the close. You could see there was a tremendous amount of volume that occurred on the close to the sell side there. This does look to me like risk was being taken off the table at the end of the month. There were basically funds out there or institutions or whatever, some OTF, some higher time frame is booking January's gains by closing those positions in the last minute. And that's important for somebody who's managing money to close a strong month, right? So we ended up pushing down to the MC point of control, which, like I said, I did not expect. That level is 2,200 and a quarter down here, and then we bounced and we reopened. We're reopened in that area. So that was yesterday, and then last night we reopened in the area. We took a quick bounce up, tested lower. So what we have is basically a push, pull, push, consolidation, and it looks like it's getting corrected now. It's going corrective now, and it's showing some strength. Again, the strength this morning is in the U.S. indices. And you may not have noticed, but gold is below $1,200, trading at 1170.9. So money is moving to risk, has been moving to risk since the election, and continues to do so into December. The seasonality probably helps that out. But overall, it consolidated throughout the European session. The European session started about here, and we've had a consolidation, and then we just broke higher on the 730 numbers. So this looks strong again. So that's how things are shaping up. A quick step back and a look at crude oil. This is a chart of crude oil. This is a chart of crude oil, and it is showing you 120 minutes, but pit session only, so there are gaps in here. If I include all bars, you would not see these gaps, of course. And what we've done overall in crude oil is to move down from where we were in October back here. We put in a small double top here in October, and we ended up failing in a classic M type of formation. And then if you flip this M here, you get the extension down to here. We ended up selling a little bit further. And then what we end up having is an inverted head and shoulders. Not that I'm a patterns guy. I don't really trade off of patterns at all. But the news that came through yesterday has caused this really big gap. The day before, the market did not expect a deal to happen. There was a lot of news chatter about their inability to come to an agreement, and then we get the news, and yesterday it attempted to be responsive, but this is really important to note because people tend to think, at least in my experience, people tend to think that the market kind of moves magically. It just moves. But the fact is that the market is a mechanism of determining value. Okay, those of you who see a chart and it's fuzzy, It's because you're not setting your viewer on the YouTube to 1080p. So switch to 1080p. You should be able to see the numbers nice and crisp. In any case, this is the market repricing. So when all of a sudden something as important as a deliberate constraint of supply, and that's the goal here, is to raise prices. When there's a deliberate constraint of supply, I don't expect us to return to the scene of the crime, unless, of course, that fails. But this is a fundamental change in the economics of this commodity here, and it's not likely to reprice in one day. It generally does not reprice in one day. It's likely to continue higher. And I was going to mention this morning that the key target above is this 50-75 area. So this is the point of control. 50-75 is the point of control of this balance zone. I'm taking this balance zone to start on the 30th of November, of September, going through until the breakdown, which occurred here on the last day of October, and the balance of that is 50.75. And so this is where we are. This was the target for yesterday. It made it there in 2 days, which is definitely not expected. I expected it to be a lot slower, probably take a couple of days to do that. But here we are, the second day up, and we're in this area. I expect it to push through by a little bit, but I expect oil to rest in here. I expect it to hold this area temporarily until next week's meeting with non-OPEC producers to see what results there. I think the market's going to be looking for what's happening there. So that's how things are shaping up in crude. I did not trade it. It was very thin, and the move had already happened on the news, and I wasn't going to jump in after the fact. So I stayed out of the way. The other thing I wanted to show you is the bonds. This is kind of a noisy chart. Let's reduce this to just the profiles. Oh, let's kill that. Let's kill these naked POCs. Here we go. Well, here's the overall condition of the bond market. This is a 60-minute chart. You could see that we have just gone into a vertical drop and imbalance down, and we're trying to stabilize, but we're not able to find stability yet. Again, this is the bonds have already rolled to March 2017. You should be trading March 2017. First call has already occurred on this product, and overall, it's just not able to find any traction. It's attempting to do so. But it's not there yet. This morning it opened and it's still selling. The selling looks to be slowing down, and we're up against a pretty big area down here in the bonds. You could see that the point of control, the long-term point of control from October 9th, 2013 is right here. I expect it to stabilize in here. I'm not expecting it to continue to trend down as hard as it has, but this is important to note, as I mentioned earlier in the news segment. As far as what we're expecting for today, we're opening pretty strong on the overnight session. Again, let's take a look at the overnight session. The overnight session is the inventory imbalance is on the buy side in price, but is actually flat in volume. So I don't see this becoming responsive or selling off, selling back to where it came from very readily once it has opened. So the expectation this morning is for an open, an early attempt lower, and then I expect it to balance back up and move through the range. The primary target is likely to be in this 2207 area, and then overall, I expect us to spend today inside of yesterday's range. That's the primary hypothesis. Okay. The secondary hypothesis is an open test higher attempt to push through and then move down and then be stuck in this point of control for today. Tomorrow's non-farm payrolls, so it's hard to make a commitment ahead of that. There may be some rebalancing on the close, but overall, I am expecting it to stay in range. The tertiary hypothesis is again test higher, move lower, push through the point of control, test just below yesterday's range right here, and then move back up in the afternoon and hold steady. So even it might poke through the low and come back in, but I'm not expecting a strong selling trend. I'm not expecting a strong buying trend this morning. I expect it to sit sideways inside of yesterday's range. That's what I have for you as far as the plan for today. Hopefully, you're making your own plan and are coming in and waiting for the market to reveal to you in due time what its intentions are. So I'll leave you with that. Again, another reminder today, you'll see an invitation go out on Twitter. You'll see a post on my website, futurestrader71.com, for Tuesday's webinar. I intend to cover some scalping techniques using order flow, just a classic old scalping, and just go over that a little bit. And then Stage 5 traders, we have our webinar at noon today. The invitations will go out shortly. Thanks.